Welcome to the Homeownership Podcast presented by Momentum Realty, located in Hanover, Massachusetts. This series covers all things real estate and the best practices for buying, selling, and owning properties. Now here's your host, Sean Maloney.
Welcome to episode 117, The Risks of Waiving an Appraisal. I'm your host, Sean Patrick Maloney. Thanks for joining me this week. This week I want to talk to you about the risky behavior of waiving a home appraisal. What could it mean for you? How could it potentially get you a home? And why do we see so many people doing it right now? Let's break it down right now. First, let's go over why do we see so many people doing it. Whenever we have a very rapidly climbing marketplace, oftentimes appraisals miss on value. It's just because of the fact that in order to say a property is worth an amount of money, we look at what's called comparables. The appraiser does the same, and they ultimately judge based on what else is sold what the value of your current home is. While this method works pretty well when the market's neutral and slightly a buyer's marketplace, it also misses in the other direction when it becomes a complete buyer's marketplace, sometimes overvaluing homes. Why is this? Because the data is used from yesterday and the market is now. So in a rapidly increasing marketplace, the data from yesterday is not enough to satisfy the data from now, especially because the appraisal is usually done at least 1 to 3 weeks ahead of the closing. It means that the comps that are going to come out between here and closing may completely reset that appraisal to have been worth value, but because it was done early, it doesn't meet. The risk of all this is that sellers right now know if they want to get top dollar for their home, they need somebody able to accomplish waiving the appraisal or giving them some appraisal allowance for a miss. Now, when it comes to what is the appraisal for, it's actually done to value the home. It's one type of valuation. The banks use it in order to establish a value that they can base their mortgage amount that they can loan to you. And usually a consumer uses it to find out whether they paid the right amount or too much for a home. If they're a cash purchaser, they don't need to have an appraisal, but it's their surety or guarantee that they didn't pay too much for that very house that they just bought. When you use a bank, you don't have the true right to waive an appraisal all the way because the bank is going to do an appraisal to see if you can get a loan based on the amount of money down you have. So the lower amount of money you have down, the more risky it is if an appraisal misses. If you're a high net worth individual, high money down, put more than 20% down, it's easy to waive the appraisal and not worry about it because you have room if you're willing to do that. Now, old story used to always be someone tells you a baseball card is worth so much money because they saw in something called a Beckett that's how much it's worth. People used to laugh. They say the day that you find somebody that actually gives you that money, that's what it's worth. Well, the same is true in any marketplace and including housing. In housing, a home is worth what someone is willing to pay for it. The bank might not see it that way, but if you did no appraisal and your house closes in that neighborhood, the next appraisal would use that home as a comp, so therefore a non-appraisal is actual true value. True value comes from what someone is willing to pay for any given item. Now, if the market changes, things can change. Remember, when waiving an appraisal, you'll need to come up with the extra capital if the appraisal misses. If not, you risk losing the deal and possibly your deposits. We want to talk with our mortgage professional on these things. We want to find out how much money can we actually waive, how can we do it, can we deal with that, because there's lots of things that clients don't think about, such as excess deposits and the different things that the bank may be looking for in order to see that you qualify. So going ahead and deciding to waive the appraisal and then thinking that you're just going to take all the money out of your bank account and pay it off, you may not be able to do that and still get approved for the loan. We don't ever want to risk our deposit. We do have a mortgage contingency, but if you waive the appraisal and the mortgage misses by the appraisal, I'm not sure exactly how it would go. You would have to have an attorney argue it for you if the seller wasn't willing to give you the money back, because we kind of had stated in the documents you didn't need an appraisal. The mortgage company needed an appraisal, but the mortgage company is going to give you a mortgage denial letter, which usually gets you out, but it's a very murky gray area and don't want to see you in there, don't want to see you dealing with that. So when we're going to be waiving an appraisal or talking about saying that we're okay with an appraisal missing by so much, we really want to make sure we talk with the banker. We talk with the person who's going to be lending the money to make sure the new terms as far as the total dollar values is going to work out. Remember that if a property doesn't appraise out, a certain number of your cash disappears. It's not seen at that point as deposit money. It's seen as just money on the table. So the bank doesn't look like you have so much money down on your loan, which means you might run into PMI. And running into PMI is not a good situation because it means that your costs may go up on a monthly, which will pull down your qualifications number, which again could mean that you broke the whole model of how this transaction was going to work based on that missing appraisal. Another risk is you may pay too much money for the home and never be able to get out. If you're moving in for a short term only, you might want to think more about the appraisal because you may not be able to build equity fast enough in order to keep up with the appraisal. And this means when you go to sell, the next person who goes to buy it off you, they might not be able to take on that debt, or they might not think it's a good value. So putting yourself in that situation can be really ugly. I know it's easy in the heat of the moment to want a house, to love a house, to think it's the best house, to want it so bad that you're willing to do whatever it takes and willing to fight anybody for it, including multiple offers and multiple bids. Well, to some people, this means getting a win. In the long run, it could be meaning a giant loss. So that's why we always like to coach our clients on, you really want to talk with everybody involved, your attorney, your real estate agent, your mortgage broker or mortgage professional, because realize this, you need all of them to help you get to the end of the transaction, and just deciding to do something without talking to the right people can leave you in a lot of trouble. You don't want it because one of the other things that really comes up is an appraisal is done way out. Okay, the appraisal is not the first step. So you go and do a home inspection. If you're doing a home inspection, so that's a couple $100 out. Plus, you're usually talking somewhere on average at least 7 days, if not as many as 21 days from the day you made the offer before they do the appraisal, plus the appraisal fee, because we're not going to do an appraisal without you ordering the appraisal, which means you paid the bank application fee because you have a signed purchase and sale agreement, which means you also have both the deposit and the purchase and sale agreement money in the kitty. And again, I can't say they're going to keep it. I can't say they're going to release it, but you may have to end up talking with an attorney. The other thing is you may have some attorney fees you accrue. So getting involved and having it fail out because the appraisal comes in and the bank needed the appraisal. Because remember, you knocked the appraisal out, but the bank is still going to have that appraisal. That can be a lot of trouble because you thought you could move forward just by saying it, but the truth is you couldn't move forward because your bank doesn't see you as eligible. Again, that goes into sometimes they want to see people have those reserve payments in their bank account ready to go for an emergency. And the next thing they know, the client decided to use them in order to be able to drop the appraisal. Let's talk about one other scenario. If the market changes and you need to sell, times can be different. In a slowing market, everyone relies on appraisal to ensure they are not paying too much. One of the biggest fears of all buyers is the idea of paying too much. So when you become the homeowner instead of the buyer, which you currently are, when you go to sell this place in the future, just because you were willing to settle, willing to take on an appraisal that missed, doesn't mean they will. While I believe with confidence that the market's going to continue to climb for quite some time here, I still want people to remember that if you're paying way out of the ordinary prices, it may be a long time before it catches up to where you're at in the marketplace. One of the strange phenomena that happen when we get in a seller's market like this, it becomes like a fish feeding frenzy. They're going nuts, they're biting everything, and then in comes a shark biting everything, and then by accident a human gets bit. Well, what I mean by it is people start making accidents, they start making oopsie daisies, they start overextending. Sellers are pricing higher than ever, buyers are bidding higher than ever, and at one point the bubble bursts and you are on the wrong side of the transaction because you're over leveraged. And then when it's time and everything aligns and you think you're going to sell, it could mean you are what they call a short sale, which is trying to sell for less money than you owe on the home. Or it may lead to the need for strategic foreclosure, which that's never a good idea. Or it may lead to you have to stay where you are because you can't possibly afford to move. Again, waiving an appraisal is a very strong way of increasing the power of an offer, but I think some conversations should be had before you decide to do it. I know it's hard to get a home out there. I completely feel you, especially working in a job where we only get paid to make it to completion, but I can tell you, hang in there and you'll be okay. If you like this episode of the podcast, make sure to tell your friends and family about it. Be sure to hit the subscribe button. If you haven't already checked out our blog, our newsletter, and our Facebook group, go ahead and do so. All will be found under the name Homeownership. Thank you so much for listening and have a great week.